It's the Crypto Sniper. 7 days ago from this chair, I said Bitcoin is bullish. I also said altcoins are more bullish. Not very good call, that one. On both Bitcoin and the altcoins, possibly the only thing we got right is Solana is still a loser in that environment. It did, of course, trade down, but that was part and parcel of the overall market. Wrong on Bitcoin going up, wrong on the alt market going up. Let's deal with what happened. And then we take into account what's happened now and see if we can be wrong again. Here we go. So in terms of the events of Bitcoin, we were roughly in this period over here. So I've done a little annotation and chart for you over here. Bang. We were in a very low volatility state in the pink box. And we also highlighted that Bitcoin versus the euro, instead of having this as the high, there was a higher point over here. And you could have technically been in two impulses of a third impulse for winding up and going up. Now, the interesting thing with Bitcoin is in most instances, and we are in a bull market, in bull markets, where you get low volatility periods, you end up having a breakout to the upside. So in most instances, that doesn't mean 100% of instances, as you will have seen and found out yourself. So we were wrong. And what happened? What changed? Well, gold was getting a lot of headlines, and there was a lot of money rushing into gold. But also, the economy. The consumer is broadly in a pretty wrecked state, I would say. And some of the data, some of the stats starting to show people are blaming tariffs. The uncertainty of tariffs, they say, for the consumer has seen them stop spending. How about just being hopelessly over indebted on a credit card? It's February month and the bills from the Christmas and New Year parties are hitting the mat in a hyper over leveraged consumer environment. How about the ugly feeling and eating that last wheat bix for many people in the middle classes that are struggling to get by in the US and in fact even in Europe? February is one of the worst months. And the data is turning. We're going to show you a couple of interesting charts. So maybe I should have been more circumspect about a possible downside. We thought if there's a downside, we should normally get a little bit of a rally first to get a bit of a right shoulder. That shoulder never came. We went into a spill. Of course, wasn't helped by good old Bybit, finding out that supposedly the story goes, and I don't take anything too literally that comes out of the media, that there was North Korea have hacked them for 1.4 billion. Let's just leave it there. Truth is, I will know even less than you about what the real truth is behind that, and that's a narrative that's been put forward. Aren't we a bit tired of exchanges having money stolen and making it in many cases their client's problem? Aren't we really tired about the high risk that exists in just purchasing in this crypto environment for those that utilize exchanges? Of course, everybody will say, keep your own keys, go on wallets. But hey, if you're somewhat active, you need to go somewhere to exchange cryptos. Anyway, that was the low volatility moment. That was the spiller, the absolute thriller. Our other framing for this, and you'll notice there's been some targeting, and we'll go to the live chart in a minute, but this is the annotated one that I wanted to show you at first. So wrong, big cross there. We were working on the possibility of downside. You'd spent actually quite a lengthy period in the stall box that I drew, which was roughly between the 94.5 and the 98.5. So we're sitting uncomfortably just below the 100K. You could see a bit of a rejection there, and the beginning of a rejection before you even got to the 100K there, and a bit of support at the 93, which is going up to the 94.5. So this was sort of the hard floor at 93, and 94.5 was kind of soft floor in this box. And once you ran, and here's the key point about crypto and people in the comments, particularly in the crypto realm, you're going to get, and I want you to monitor the comment section, because and I bear in mind the comment section. I love your guys' interactions. I'm going to ask you to leave some interactions, but sometimes the ones that interact the most are not always the highest common denominator of response. You're going to hear FlipFlop accusations continually, and you're going to hear you were wrong accusations continually. In an on-balance of probability-based game where we are talking about the future, you can absolutely take it as given that you're going to watch this channel and watch me be incorrect. And the fact that I keep showing up and being prepared to be incorrect either makes me very, very stupid and glutton for punishment, talking about something that might happen in the future and how I can skew a slight edge on a balance of probabilities for something that might be more likely to happen, is a mug's game. Well, actually it isn't, because it's not actually how many times you're right. It's whether you make money that builds your wealth in the crypto realm. And here's the interesting thing. Because I understand volatility, and this was a low volatility event, once the move began, and I certainly wasn't super early as we typically are, but because we recognize low volatility events, that pink box, as a key event and are volatility based traders, the minute we started to go here, I was on notice for the possibility of being wrong. And the minute that candle ran here, our blue line, which we had identified as a key level of significance at 93K, I was starting to say, I think I could be wrong. And that allowed me to take shorts that we were wondering which way would you be, bias bullish for now, but actually swing bearish. And on those that we'd entered, we took managed losses. And on those that spilt, we actually made more than those managed losses back. So you can be wrong and make some money. And there's traders out there that are, or people on the YouTube comment section that may actually be right and called it a sell-off, but made no money or even failed to put the trade on. So A, do you trade? Do you invest in crypto? Are you active? Do you back your own decisions is one of the questions I will always ask someone who posts, you were wrong, you were wrong. Do you back him and do you put money on him? So it's great saying somebody else is wrong who had a go. It's kind of like us all watching the rugby match. He dropped the ball, ha, 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 ha. Take that guy out of the crowds and put him in that position. And in most instances, they're not performing particularly well themselves. So you can actually be wrong 75% of the time and be very wealthy from trading and investing, utilizing average. It's all about how quickly you realize when you're wrong, and if you can still even make some money in those instances, or at least minimize the loss. So we have a managed strategy of losses, and when we are waiting a key breakout, if it's not going in the way we do, we change our view. We're kind of like a politician. You know, the politicians, we all hate politicians, don't we? If you don't like my policies, I've got another one right here that I can offer you. In short, they stand for nothing, and they'll flip like a hamburger patty in a downtown greasy burger joint. And that's kind of how you need to be. So to the flip-flop guys that will say, you said that and it turned out that, let me just tell you, it's kind of how you're meant to be. In trading, it's not being married. It's not sticking to your guns and standing on principle and taking the pain. It's recognizing when you're wrong, and the faster you recognize it, the quicker you realign and actually making money. In the end, having had my last YouTube, as shown to you, being bullish alts and Bitcoin and being hopelessly wrong, and this is the thing with volatility trades, we don't do a little bit wrong. We're 180 degrees wrong, because when the move comes, it's going to be high momentum. So if it's either going up or it's going down, it's a 50-50 call generally. And you can quickly eventually get a point, well, hey, this one doesn't look like what I thought it was, and get the rest of the move to the downside, which is what I did. I ended up trading SUI, and I did reasonably well. And I pointed the community towards ADA once it showed also its intention that we at one point looking for the upside, turn downside. And I'll be showing you some of those charts right now. Time to go to the live charts and talk about, though, not just what happened and how we were wrong, but also what's possibly coming next, because that's what you're most interested in. And as ever, we can be wrong, as proven. Okay, so let's do it straight away, go into those live charts. So we say goodbye to His Holiness. It almost looks like I'm saying in the name of the Father and the Holy Spirit there. I'm blessing you all in crypto. Let's have a look at that BTC chart right now. Okay. So what's kind of interesting, and the framing of what ended up happening, and we've thrown a volume by price across this. So we're looking at the daily, we're looking at Bitcoin. There's that low volatility pink stall box that we drew for you over there. that we said, okay, probably going to lead at least to a right shoulder rally for a head and shoulder, or quite potentially more to the upside, and we're completely wrong. When that happened, we had already identified our key level of 93, and also what were the highs on the dollar. So we're going back to looking at the dollar. We'll go look at Bitcoin versus the Dixie or the euro in a minute. You technically had two rejections. That was a shooting star rejection as well, by the way. Although it traded a little bit higher, it never took out the top of the range. It technically had two hills that died on the same hill in and around 108. Yes, you got to 109 on this one, and that was about 108 and a bit. But that's typically referred to as the marginally higher high. That's typically referred to as the marginally higher high. So that is generally not bullish, because you trip all the support and resistance traders in on the new high, and then you immediately die back down and you hand them a loss. And that is loss of momentum. You have just enough momentum to come up and take it out. Don't forget, to make that original high, you did that, and you only had to come from a low over here, yet you could only go a smidge more. So that inherently points to a loss of momentum. Now, double tops are a thing, and let's draw it for you. In essence, that's your double top. There's a small amount of complexity. You didn't come all the way, the wick did, but you were paused at this range box that we've already covered, a little bit above our neckline level of 93K. Now that generates a target. On a daily level, it generates a target, and that was 79.75. So once we realized this was a short break, we said, okay, what patterns exist for the bearishness that we kind of seen and didn't overvalue at the time that we now need to take more seriously? And the double top call is definitely one of them. The interesting thing is the point of control, by the way, on the volume ran straight through our stall box. Obviously, it would have contributed it, many of the bodies of the candles running through over there. So you got your M head, which is typical. There was a small complexity in the middle over there, and incidentally, I'll be showing you that again only on the inverted side when we take a look at USDT.D, dominance of Tether. Still the biggest stablecoin despite whatever FUD and etc. is going on about it. So the double top target for Bitcoin has in fact been run, and the reason why we put this in an orange box is we're gonna say it's gonna go up again. That's right. So not only did we try up and get it wrong, we're gonna say it again. But that's tactical call. This is a potential reversal, by the way, a reversal of bullishness. And I think we needed a bit of this. This Bitcoin, since this first jump point when we ran 93, and then eventually we closed over 100. Let's get this straight. Bitcoin isn't leaving 100 in a single day of breaking it for the first time. And that's already been the case. And I still think there could be more chop suey to be endured. And when you are trading in the chop suey, range trade to the top, coming off, back down, buy, sell the low, goes higher, go to the high, try buy the high, comes down. This is not a great breakout trading environment. It's a bit of a range trade. In short, good range traders, and I don't know many that ever make money that do range trading, because normally by the time you recognize the range, that's usually when it breaks up. But in this instance, had you been a buyer, once we got above 93K, every time it traded 93K, and you were a seller that 2 or 3 times it went above 104, say 104 and a half, 105, you might have made money twice. And then eventually you would have been kicked in the backside with this breakdown on a short, and depending where your money management stop is, you would have taken quite a sizable loss. So I don't see it as a long-term good trading strategy, range trading, and most retail do not perform it in a good manner. So it's a losing period for trading inside chop suey, as I like to call it. Too much up and too much down, churning around, and not necessarily positive patterns. So this is a little bit of a sideways, and there's been a little bit of risk off. By the way, we did make a call. So a couple of things we did get right, which I'm going to throw in because I'm admitting to some things wrong. I'm allowed to point out a couple of things we got right. We called a localized high for 3.36 of XRP. And in actual fact, XRP's come off immensely from there. And that turns out to be what I'd consider to be pretty apex point, and since then it's been pretty soft for crypto. So XRP was localized high at 3.36. It turns out probably all of crypto around about that time was at that localized high point, and we've been in a bit of a risk-offy vibe. We've seen the USD 10-year Treasury come down a bit, which means bonds are getting a little bit of a bid. Look at the sell-off over here. And even gold, that's been greatly loved and had a lot more fundamental bullish news come out about it, has had its toes stamped on in the last day or so. A typical Friday crash has taken place. This, by the way, in terms of us calling the break, the run through of $2,900 will lead to a localized high for gold. Remember, gold, king of the anti-fiats. It's the anti-dollar. And it's also the leader of the anti-fiat category. And Bitcoin is king of the crypto anti-fiats, which is a subset of the larger anti-fiats. We've explained this before. And this was grinding through the confluence of targets that came both out of this, and I'm going to put that back on utilizing our HVF draw tool. So let's do that first before I scribble and do a beautiful Picasso all over this chart. Absolutely gorgeous scribbling of great note. Belongs on a toilet wall somewhere. Anyway, so up it goes. That's how a loss of momentum market grinds home. Lots of weak bid coming up. Must get in gold. Oh, London's had to send all their gold. It's all unraveling. Woohoo. Gold's about to be revalued at $30,000. Woohoo. Chase. Tactical selling, capping it, minor highs. Confluence of targets coming out of the last HVF and the macro bull flag. So I've just done a detail on gold. I don't want to do too much of it in crypto. This is a crypto channel. But because of its relevance as a king of anti-fiats, I do need to bring your attention to this. So that's a localized top call that we made since 2011, when it first broke out on the weekly channel. So this has been a good environment for the anti-fiats since gold broke out in 2024, round about here. You had a low there of $2,011, 2011, let's get it right, spit it out, and you've since run up, and this has been a very good environment. Good runs, wind up, final finishing upside HVF, and now a bit of pullback. Now, by the way, it's not the end of the gold bull market. Again, there's so many people that'll characterize. We talk multiple time frames of analysis. Remember that. So you have short term, mid-term, long term, and I call super macro. So we have a 3+1 strategy. Super macro is like just out there. Super macro, gold a bull. Macro, gold a bull. Medium term, sideways. Short term, a little bit off, down, and then sideways is likely. So we haven't got 4 green lights across the board. We like to get that at that moment that the final short-term light turns green, jump back in. We've actually got short-term pullback given this bull flag out of a 3-year continuation, by the way. So that was your CV19 high on gold. It dipped a little bit and came straight back and made new highs post the events of CV19. That flag pole that you are seeing right there is what generated the target of 2.9. Plus you had the confluence of this upside HVF also generating it. So if gold is getting a rest, we're getting a little bit of dollar strength too. So a little bit of risk off, a little bit of money afraid, running into, I'll back the US government. That's Pavlovian response. It's never going to be what it once was because the reserve debt asset has lost its confidence. People don't trust it as a reserve asset anymore, and I will be doing a presentation in Germany on that, but I just thought, again, I will show that there's the big loss that saw it lose 45% over the last 2-3 years. So escalator on the long haul going up, elevator so far down in 3 or 4 years. It's lost its asset status. America's credit card has been pulled, guys. That's why they want to cut the military. That's why they're talking to Russia. Why don't you cut the military and we'll do it too? Because they have to. They can't. They've got 9 trillion of rollovers to find a home for. Nobody wants to buy it. Guess what's happening? Biggest buyers of US debt? Cayman Islands, UK, well, China and Japan are backing off, as you probably know. UK, the guys that provided all the gold. Hey, I'll be your toxic bank. I'll be your little bitch. Yep, Belgium, Luxembourg, and, of course, Cayman Islands. That's very interesting mega metropolis that's decided to be a huge investor in gold. If those don't sound like proxies for retaining a Ponzi scheme in its dying legs to you, then you are a little deluded, in my opinion. But who knows? Who knows? Who knows? Who knows? Right sizing. We will be doing live trading day this Friday week. And the final shoe, the lagging indicator for an assured recession, is employment. It's the last thing to fall. You're already in the recession when you get the terrible unemployment number. Why? Because companies don't like to fire people. They have to pay them a lump of payment and a couple of extra months and can their pension, and then if everything turns around in 9 months, they're hiring them back again. They have to pay them a higher salary because they showed how unloyal they are. They have to re-onboard them. They have to reconnect them. It's an absolute nightmare to do that. You hang on to your employees until you really, really have to cut. Then you've got to cut to survive. And as you'll see, and we covered this also in the Market Sniper video on gold, the unemployment turns with the yield curve reversion. The yield curve is on the gold and the colored chart, and every time you see it reverting back, you later end up in a recession. And you see the same, the unemployment number eventually runs. The unemployment number lags, the yield curve leads. Francis Hunt, the market sniper, the crypto sniper right now talking to you, is only interested in leading indicators. However, we know when the leading indicator does something and one of the lagging indicators then follows, that you are going to get the confirmation of the severity of that leading indicator. And the green line, I await bad news. And you can join us trading that on the live trading day with crypto and the traditional markets with the break in between, and have the recording for 30 days for a paltry amount, I say. Link is below, $197 to attend. 3 hours of time, and you can watch the recording. You can ask questions. You can be with me and see how we analyze the market. But I'm expecting bad unemployment. What's happening? Elon's taking a chainsaw to the government status employees. What do you think that does? Unemploys a bunch of people for sure. They also don't pay their mortgage, more on welfare. That's downturn material, friends. Should it have got that big? No. But can you easily take a heroin off his heroin addict? No. It sometimes causes the hanging event that you're trying to avoid in the first place. So we'll watch how this pans out. Too far gone means damned if you do and damned if you don't, and you could be in that situation in terms of the American policy. The right sizing of America is a huge theme. It applies to the West as well. The credit card has been pulled because the debt market has lost its role as a reserve asset. That is why gold has been going up. That is why we've had the discussions around Fort Knox, and that is why all the political news you're seeing about the incumbents in power are all about right sizing, grabbing resources from other nations to have more balance sheet of assets, oils, gold, etc., and trying to find ways to reduce expenditure. America is the biggest funder of NATO, and that's why they're being so mean to Europe nowadays. I quite like it. Europe getting a kick in the nuts. Well, they pay 70.5% of the NATO budget, and they don't have the money anymore. So it's time to get mean so that you can get rid of some friends that don't pay their share of the bill, and hopefully have less warfare. That's why he's suing for peace and meeting Putin, or talking to Putin himself. So there's quite a bit of geopolitics in there. Let's take it back to crypto XRP. You may remember this upside, 3.6. You ended up with a final high of 3.4. That is a localized high because you've done nothing but trade lower. And in one instance, in a spiller, an absolute thriller, you traded at 176. That's the better part of a 45% decline. You avoided it by closing your leverage trade and cutting some of your investment, having some tether, which is what we did out. I didn't get 100% out, but I got partially out during that period. Now we have XRP breaking, basing ascending grind line that we've drawn, and also we have a possibility, not a necessary event, but we have a possibility that the upside HVF could in fact be a left shoulder here, with the key level being $2 round number, $2 round number, armpit 1, armpit 2 on the big spiller, the absolute thriller. The first time you hit your horizontal neckline, we don't do the angled upside. You can't project targets, not from a key level of significance. It's a golden rule of HVF method. You can find out more about Hunt Volatility Funnel Method, how you should be using your technical charts to get the magic geometry that helps you understand where markets are likely to turn, how far they may fall, targeting stop losses and entry points for successful asymmetric reward to limited risk trading. Our goal, by the way, as the Crypto Sniper, is to help people maximize and build their wealth, preserve their capital, which is money management, and it also goes into our reset preparations from bank accounts and everything else, passports and residencies, and secure your freedoms. So let's say it quickly now. Build wealth, preserve capital, maximize freedoms in an environment of total reset almost guaranteed, with a CBDC electronic money agenda certainly playing its way in. So the localized high that we are called round about 3.6 that traded 3.4 in full could in fact already be part on a head and shoulder that's already done. However, we are getting a bit of a bid back hammer, so you may get a secondary shoulder. We will highlight that in the left shoulder here with XRP, you dipped to the neckline once, then you rallied, you dipped to the neckline twice, and then you rallied, and that's what gave us HVF structure the third time again. So it's quite plausible that you get a rally and then you come to the neckline again on a smaller second right shoulder, and you could rally again and have a smaller third right shoulder in the same way you had a big left, a slightly smaller left, and a slightly smaller left, one after each other, before you got the breakout to take you to that localized high of 3.6 that we did indeed call. So not super satisfied that all the troubles are over for crypto right now. Bitcoin potentially with the, some may say, the extreme selling and the over focus of gold, which might reduce given gold is now coming off, has a hammer which sees us suspect that Bitcoin could rally a bit. But the candle isn't finished. It's a daily candle. It is a hammer. You were rejected from just above 78. It's the 28th of February, the last day of Feb. Beware the Ides of March, they say. March is kind of like the October. Of course, you have the equinoxes that plays a role, but it's kind of, it's sketchy season. And yeah, beware the Ides of March. So we hope that there will be a reasonable rally as a result of this hammer. But there have been instances where you've had a hammer. You had a hammer here, for example. Yes, you did go up short term, but that didn't stop you from ending up lower later. I wonder if this will be another instance. Remember, it's a reversal pattern. Is it just a reversal pattern to target, or is it a new trend given that it has now reversed? We will have to see whether a continuation pattern to the downside is here, or another reversal forms on the lower time frame, suggesting upside mobility and back into the churn and chop suey, which again, not an easy market to call. We're going to be able to prolong a lot more until we get a HVF structure where we're often more right than not. We're going to be on and off wrong plenty. Feel free to tell me in the comments, you're always wrong. And remember what I said, it's about making money. And actually, it didn't cost me this. In fact, my Bitcoin valuation for doing defensive strategy, and we also on X in my defense, closer to the capitulation happening. We can't do YouTubes. I was very busy all the time. They take a while. I said, it's getting sketchy. It looks like we're going to come down. But I don't want to take away from that. We're owning up to being wrong about Bitcoin selling out, because that was our initial view. It's probably up. It's what you do with that and how much you let it take away from you that truly matters, and how you respond to the opportunity, given that this is a volatility-based expansion. You see, sidebar, stop. Volatility. It dissipates slowly, like the tide. It comes in, comes out, creeps up on you slowly, dissipates slowly. The difference, unlike the tide, when it returns big, it explodes. So on the one hand, volatility fades away slowly, dies a slow death. When it returns, it just detonates. It doesn't taper back up and slowly get bigger. It explodes. That's your gift right there. And if you get that you're going to have a breakout move as you get volatility expansion, then even if you get the direction incorrect, as we did, you can switch over to the dark side that was originally not your original intent, and that's what's called trader dexterity. You need to have that potentially because there was a great opportunity. Okay, so Bitcoin hammer, I would guess a rally short, medium term. Short, medium term. Overall, possible reversal. There aren't really 4 green lights here for going long, guys. There's a short-term green light for a possibility of upside. No easy targets. Look, I can drop to a lower time frame. We can have a look. Why don't we do that? You might be able to nick something from it. For example, when you tend to bottom, you do a descending broadening structure. That's how it led to this hammer. What's happening is you fall hard and fast initially there, and thereafter there's a bit more volatility in the broadening. There's a bit of rally. There's a rally. There's a rally. Big plunge, hard rally. So what you're seeing is the sell-offs get a little bit weaker after a while and the rallies get a little bit stronger. There is a slow changing of the dice. You had a localized high. You've almost taken that out with this move so far, which is yet to be finished. You may do so in time. So you start taking out some of the localized highs and making new highs and making higher lows. That follows through potentially, and that's why I think you got a potential hammer reversal in here. So that's just different time frame viewing the same price data. So it does look like there could be a rest, but just because you get a hammer, it's one swallow. It does not a summer make. So please be aware, you might get some relief, a relief rally, and sometimes you can get some pretty quick moves in rallies in bear markets that then come down even faster and further later. That's not a bear market call. I'm just warning of you what can happen. Okay, so that's Bitcoin. Let's have a look at some of the other things we mentioned. We did XRP with you, and as we said, that was the good localized hold. What do we call? Well, there isn't a head and shoulder threat here, but you are about to rally. Maybe you get 2 more little shoulders as part of a shouldering complex. We deal with complexity in head and shoulders that no one else have. As I've already highlighted, there were actually 3 smaller impulses in your left shoulder there. And your head was actually an HVF high at the 3.6, which literally sold the top wick of the very best candle. Now you have one big impulse with this dip down that actually makes this into the biggest part of the shoulder, and the shoulder starts anytime you meet the key level of significance, $2. Do we do 2 more, getting smaller, and then break the 2? Now that would be quite bearish. And don't forget, we're macro on XRP looking for $20, but demand destroying event. Remember, Bitcoin traded 4 grand during CV19. There's some funny little mumblings and rumors coming out, by the way, on that. Go and check it out for yourself. And of course, unemployment, economy going bad. You often get, and I repeat this, Bitcoin needed the 4K spill to get the 20K high. That was the first cup gold nugget. That's our nickname for that Bitcoin USD major HVF structure that had a $20 high side. That was, no, my apologies, a 64 that later led to 69. My Bitcoin memory is failing me. So we just want to recap that because I made an error, and I'm going to bring the chart in to justify what I'm saying. So here's what I'm talking about. That flush out. You need the QE to truly have the hot liquidity money to chase into the high risk crypto. And once the big money chased in, the BlackRock money and the QE money generated by the Fed, you then got all the retail surging in, and you gave them derivatives to pump it up, and they ran it up to 64K. You had a 50% plus contraction down on a falling wedge here to 29, and then you squeezed out a marginally higher high to 69, and that was the end of your bull. Note the flush out to set up the big move. Flush out, set up the big move. Hear what I said about our trading day, the unemployment, the yield curve reversion. All the shoes are done. We're waiting for unemployment, the final one, the lagging one, the last one, to pull in and take its space in the final parking bay for the earthquake to hit. What form will it take? You don't know, I don't know. But it's not looking great for the economy. And firing government workers, while a great idea generally and well favored by Mr. Small Government Me, is definitely going to bring about the recession if it's anywhere nearby. And I think it is. I think it is, and I see it in the market. There's corrections everywhere. So could we be on the point where a flush out is due to get our 145 odd thousand to the upside? And it's going to require new policies, new QE. Will they be able to do the same level of debt that they did in the events of CV19? And here's what I think. No. Why? The credit card got pulled, the limit reduced, got cut in half, and you got a new one. You got downgraded from black to just silver credit card. And the credit limit, right-sized. And that means not enough people are going to buy the bond market to allow you to issue too much more debt. Plus, you've got 9 trillion to roll anyway. You're going to have to use a lot of that liquidity just to roll what you already have. So you're going to be monetizing all over the place. So having made 100, I think 144, 145, as we've done technically for you before, go check our previous videos, does still seem possible post an event. Bitcoin needs new juice. I ask you though, in the gold versus Bitcoin argument, are you choosing Ron Paul, your avatar for gold, to look after your kids and sound money and the purse strings of a nation? Or are you asking Larry Finkelstein? Well, I'm not asking Larry Fink. I'm choosing the physical realm. And if they really want all your wealth in the digital realm, which is their railway system that they have designed, owned, and know all about, and you are on somebody else's territory, do you really want all your wealth based in digital assets on somebody else's football field who knows where all the mines are? Thinking, didn't take me long. No, that's me. But anyway, maybe I'm just not seeing the potential of the technology, the speed, the everything. You know what? Having it is good. Just having it and not having it taken off you. And not having it tokenized, not having it put on a clipboard for some unrealized capital gains, wealth reduction by your local extraction service, aka the government. Anyway, so that's Bitcoin. That's your update on that. Watch the treasuries coming down, the rates coming down. This is a little bit of risk-offy vibes. That's why also we were wrong on our guess. This came subsequently. We had actually had an up move on rates, and then this all happened in the last week, and it turned. And so was the crypto collapse. Let's talk about ADA. A lot of ADA fans, and in fact, we had a draw that was an upside draw that turned into a downside draw. I preferred, again, Cardano in the euro against Cardano on the dollar, because we had a little technical high here that saw actually that being marginally higher. And we were initially wrong, looking for possible first upside setups like that on the euro, not the dollar, because it's a little bit higher there. And we were saying, will you give it to us? But what we started to see is the up legs as we got to the business end of the setup. And this is why I said, to the community inside our trade leaders part, this could be inversion. The downsides were a little violent in the momentum stakes, and the upsides were a little more grindy. You see, we were at the third impulse and getting in there, and in fact you had a little primer in all of this. There was another grind that didn't get anywhere near as fast, that 2 candles to the downside took back real quick. And then there was another grind, kind of slow and to the right, and then you triggered. At that point, the minute you broke it, you could have, should have, if you understood HVF method or were part of this community, realized this ain't a long, and in actual fact it's going to be a short. And you could have locked in any losses if you had already got in. And in fact, we trade a just-in-time method that if you're unsure, you shouldn't even have been in yet. You should have been waiting for that high to be run, which never in the end happened. Therefore, you lost nothing, because the value of HVF method is if you're using the just-in-time traditional entry, the market takes you in, which is why you are not using market orders. You are using stop orders. If it trades here 1 cent above, you have broken out of the volatility squeeze and therefore have indicated the direction and are self-confirming in nature. That never happened. That trade closed. You could have cancelled the order and got short and actually lost nothing and pivoted and been wrong and made money. Remember, make money. Let everyone tell you how wrong you are and get richer. It's all good. It's all very, very good. Book a call. Link below. Have a chat. That's how you play it. Anyway, let's put the tool that you would get as an HVF student member of our community. Is it all over? Now, we know Bitcoin is part of the answer to that, being the major. We also know the dollar is part of that, and it's got a little stronger, and the T-bill is getting a bid right now, and I think it could get more strong, and the T-bill could get more, which could mean more headwinds. So whilst we have the hammer on Bitcoin, a hammer is not a trade on its own. A rally, yes, don't get too aggressive, because you got a reversal pattern, and that could mean more than just reverse to target, an ongoing reversal. So I would wait a while longer before getting back. Investment long for the long haul. Feel free, if you know what you're doing, know where to place a stop, to trade short term on a little bit of a bounce, providing you have a target. But there's no HVF there, and for me, that's my method. So you would be very tactical if you did that. So first interim there, you sped through, you rallied to it, you got resisted at it, you squeezed again here on another downside, and you smashed second interim on the ADA Euro, because on the ADA Euro, that is your highest point, that is your second highest point, and that is your third highest point, with sell-offs in between. And as I've already highlighted, loss of momentum here and harsh down legs. Elevator, escalator, elevator, escalator. Yeah, you're starting to get it, I think. I've seen this movie before. Okay, very good. So small rally at the moment, but actually there's a downside target of 44 cents and you're trading 60 cents right now. Percentage, how much would you lose if this 44 cents is to be run on ADA from this point right now? Now, I don't think it would turn and start crashing from this point. It may in fact go a little bit higher, but that's another 27%. By the way, thinking it was going to go upside, jumping in anywhere and so far, and you could have at your best been already 25% down. That would have been, if you were short, you would have made 25% of your position, and you're still 18.5%. So this could rally a little more and churn around, but there could be a second wave effect that takes crypto generally down. So short term rally, medium term, a little bit of a worry for a second go on the downside. Remember that. What is the view for the time frame in review? Trade your time frame. If you're a short time trader, grab a few pips to the upside. Medium time frame traders wanting to leave it for days, going into another week, etc. over the weekend. Maybe be a little circumspect about how things could turn. Someone will pop up and say something and we get Mark 2 to the downside. Okay, so we've covered ADA Euro, we've covered XRP that everybody is interested in. Of course, the macro still holds, and as Bitcoin ran the 4K, that didn't stop it from subsequently running 64K, you know, so it actually gave it, you needed to take a step back to run a few steps forward at a far greater pace. You needed that run up, and sometimes that's the dip to the downside that generates, and the quantitative easing. But I don't think you get the same amount of juice for Bitcoin on the next go. So I don't see much beyond 144, 145 if that is to happen. And at the moment, it looks like a short-term rally, but potentially more downside could occur. Okay, what other coins should we do? I think that's largely it. Sometimes I like to watch how XRP, a key token that on the macro we're bullish for, does against the likes of Bitcoin. Again, massive outperformance. This flat upside HVF also gave you the top of XRP's outperformance to Bitcoin. Very low vol rather than it being bullish. That was the beginning of some cause for concern. Other tokens going down more than Bitcoin means risking off. The highest beta is an alt, Bitcoin next, and then we get into normal, tech stocks, then we get into everyday stocks and gold and etc. Right now, we're here, a little bit of a broadening structure, a little bit of support along this base here, but this is an ascending megaphone with a marginally higher high. Yes, it was 3.4, and what were you over here? You're about 3.19. It's not a mega move higher on, that's in sats, of course, because we are looking at XRP Bitcoin. It's not a significant outperformance. So I don't see chronic overperformance from XRP short term, despite the macro. Maybe it also does that after that washout event to the downside. I don't see it. But you said altcoin dominance. What else did you get wrong? Let's do our full confession. We also said the following. Good friends and people. That was the Suey inverted, by the way. You can see our Suey. We discussed Suey a little bit. We drew this setup inverted. Let me cover this before I do Bitcoin dominance and Tether dominance. Little squeeze there that allowed you to get in early. You made the first interim, that's there. In fact, my apologies, that's the first interim, it's over there, and you're having a pullback. Is it necessarily over? No, I don't think so. It is a marginally high. This is inverted, by the way, so this is the downside of Suey. We like to look at charts the normal way around and the other way around. Why? Eliminate your bull bias. Eliminate your bull bias. That's what you do. It should come to the same conclusions, and if you're not, you have a bias. Remember that. We're trying to be scientific. We're not trying to have a particular mental view, a belief system that we're trying to reaffirm. Here's the thing about rationality. Most people think they're rational, but what they actually do is they make a decision and they find a rationalization to justify their snap decision. You looked at my face. Some like me, some thought, who is the bald man with the bad complexion? I don't like him. Oh, it's too bad. That's what happens. Then you find the reason. He was wrong on Bitcoin. He's wrong again. He's flip-flopping. There you go. That's all you need to hate. Hit the downside thumb. Make it the downside thumb. You don't like him. He was wrong. Also, you might decide the other way around, and therefore you naturally cut me more slack than you should. Okay, so that's the inverted. That's the inverted chart. This eliminates bias. You are squeezing a little bit higher over here. A little bit of a wedge. Just because you have a pattern doesn't mean you're guaranteed it goes to target. We've spoken about 1.72. We were getting engaged and discussing it a lot at 3.5. Once initially as an upside, and then chronically once it started to move with real momentum here, still in the funnel at 3.2s, it turned into a downside for us. And I made profit on this, I'm proud to say, despite being wrong. Not a lot. When you're flipping, you've got to net off the cost of being wrong initially, but it paid for itself. So remember that. Now, I came to the inversions because I actually was looking for Bitcoin dominance, but I'm glad I discussed Sue. And I should show you Sue. That's our friends that were doing Marcus Rashford's. Some of you are laughing because you know that YouTube channel, the car guys, the Sue. The Bentley, or was it? Yeah, was it a Rolls Royce? It was a Rolls Royce. So Sue USDT, it's the automotive guy, Martin Armstrong. Tell me in the comments below, who am I talking about? You know, me and names. I'm just not doing it. So this is Sue seen from the 4 hour on the normal way around. Now that I confused you by showing it upside down. And I do that because it's meant to make you uncomfortable. You know what they say about brushing your teeth with the other hand? It doesn't feel comfortable. You don't want to do it. The person who asked you, you don't like because it's awkward. I don't want to do something awkward. I want to do something familiar. Well, that's why you don't grow. That was the downside break. You had a little primer set up, and we've shown you this upside down. Can you see it now? That's a triggering event. Down, 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 down. Little bit of a marginally lower low. It may not be as bad as ADA, bit of a rally now. I chose not to hang on with all my size on the lows. Why? Because we saw USDT.D. That's the final thing after Bitcoin dominance that I'm going to show you. Let's go to the USDT.D. USDT.D. Don't cock it up. Too many titties and D's in all of that. So, you know, I tend to get a little bit dyslexic about those things. So we did show this in a previous YouTube, and we did warn that there is a possibility. So we did give some warnings, but, you know, you can't be too convinced. That's what I say. It's an uncertain chop suey period. And we gave all these targets. You have now had as with Bitcoin being a hammer, a shooting star on USDT.D. What is this? Left shoulder. W bottom with some complexity. Remember I mentioned it on Bitcoin that you had a half bounce between the M, a little bit of a complexity. Here's your half bounce on your W. In short, you're looking at something upside down that almost is the Bitcoin chart itself. Dominance of Tether. That's people escaping the risk and locking in their values. And my Bitcoin value went up by not going down and being more defensive, and also having a little bit of a cheeky trade to the downside with Sue. So that's helpful because your Bitcoin value goes down. If Bitcoin does rally and you put it back up, back into Bitcoin or something else that rallies faster, you could continue to gain or at least hold that higher Bitcoin value. So it was a little bit of a winding up here. On the neckline, you can see the neckline roughly at 4.49%. That's the percentage of assets that are electing to be in stable coin over crypto. And it jumped, and it actually ran all our targets. We ran a few scenarios here. We hedged our bets, you can say. You've got to be right. Look how many times you do targets. What's that? Come on below. Just tell me how terrible I am. I love it. Comment below. 5.27, 5.54. We drew them and we gave you the different reasons. There were two necklines we ran with. One was a legacy target from way up that began the bull market, Tether selling off because the money's flowing into the cryptos and they were going up. And the other was the round number 4.49 that ran that high as well as the in-between high over here. They were all intersected, and the little shoulders here that I've also drawn that actually gives you a little bit of a W with shoulders. You could argue there's even an inverted head and shoulder in that, plus your squeezy Japanese and transgender pink. Woohoo! Volatility breakout, smashing all the targets. Breakout trading utilizing HVF method. We had seen that. I should have been more alert to it. I didn't overweight it. But once it flipped, that's key. So right now, having made that target and getting that level of rejection, I'm not shorting cryptos. I wouldn't put any new shorts on cryptos. I think you're going to get a little bit of a creeping up over this period. Okay, a little bit of a creeping up. USDT ran 5.54. Okay, so we did talk about that, and there was a chart that was also shared once or twice on X. Are you following the crypto sniper? Lots of imposters. Check the number of followers. It should be high. I can't tell you the exact number. How many followers do we have? I don't know. Oh, I don't track it every day. I'm so glad to have you guys. The crypto sniper. Let's have a look at his profile. 29.1 followers. Note that it must say the crypto sniper. Don't let anybody, we will never DM you and say, hey, send some USDT for our new crazy scheme that you're going to become a gazillionaire. Won't happen by us. Anybody, we will not contact you directly. The only way you get to talk to us, in actual fact, is you type in these 3 words, 3 W's, the market sniper. Because we are both the market sniper and the crypto sniper. You will see a website that looks something like this. That's about to load one day in the next millennium. Bong, we're getting bored. There it comes. There we go. Okay, so book a call. Hit the book a call. Check out our results, by the way, on the oil trade, Euro Swiss bond, and smaller, lots of cryptos, etc., all on that part of the site. So back to wherever we were talking about USDT. So that feels a little bit blow off. That was a bit of an abrupt move, and I think actually Tether comes back. There'll be a little bit of money sneaking back in to the value basket of buying Bitcoin on the dip. Buy it on the dip, buy it on the dip. No, it's dipping and all. Okay, so BTC dominance. Let's finish with the dominance, the dominators. We're finishing with 2 dominators, with Ds, the double Ds. Who doesn't like a double D, a set of double Ds? How can you complain? Okay, so we bring them in, we bring them in. Now, this one, typically, we like to look at on an inverted basis and on the macro. My overall take is always something like this. And we will highlight on some occasions we have been correct. We are not apologizing or regretting being inaccurate. And we spoke about the stall box in here and the creeping dominance of Bitcoin during this period. That's on a monthly time frame. I will put it on a fortnightly in a minute. And we've said to you all, the day will come, and we will say it again in spite of moving in the opposite direction, that Bitcoin trades less than 24% of dominance. That means big alts have grown faster and bigger and more furiously large than Bitcoin will. In short, my outlook for Bitcoin is that it is superseded by certain chosen ones that may have a very useful status role in the future digital society that you're about to encounter after the next crisis. Who knows? Who knows? I'm just a guy with a YouTube channel having a guess in the wind. What we do is future forward casting. So you'll note that there is a shooting star on this, and you could be at a localized high. You almost ran 65. We are on a fortnight, aka 2 weeks, market cap BTC dominance, and you are being rejected there, and you're having an indecision doji. After a slow grinding move up with a couple of sell-offs, but nothing too severe, eventually I foresee that you are now in a very popular zone and likely to be rejected. I don't see you running anywhere near those highs. I think this is the box zone where you get rejected. Let's draw it more nicely. Nice, nice. Drawn nice. As the other alt coins that are faster, quicker, have various features more useful than the original blockchain that is Bitcoin, start to have been around for a long, long time, and the major macro ones dominate. Some of them have actively sought after the central bankers. We would see the ongoing reduction in dominance. And as I was highlighting, slow up and quite hard down. Slow up. There's your bent banana into the box, the trade box. Very hard down. A little bit of a watermelon smile over there at the bottom, a rounding out base, and you broke out. Very low vol grind up. It's taken a long, long time from 2023 all the way along, eventually getting to the box. You were rejected at the box. You came back in one more time, marginally higher high, and a shooting star. So we stand on the alt dominance theory that will upset Bitcoin maximalists to the T. It is going to reduce in terms of the total cap, and I don't even think that's an extraordinary prediction to make. With ever new tokens entering, new technologies, new abilities. When is the first version of anything ever the best version? I ask you with tears in my eyes. The altcoin dominance will win out versus Bitcoin dominance, especially as new technologies are emerging, AI, etc., etc. You know all this. It shouldn't be controversial. However, there is maximalism, and that, my friends, is a belief system. The one and only internet company. The first one was the best one. Nothing more can be learned. All the inventions have been invented. You do know that at one point in time, there was a law saying that no further patent applications will be taking. Everything that could be invented has been invented. That is humankind stupidity. It did happen. I tell you with great glee in my eyes that it did indeed happen. And to me, maximalism sounds a lot like that. It sounds a lot like that. It's coffee. We would like, instead of coffee, BTC dominance, and we will look at it upside down, and then we will finish this video. Don't forget, live trading day, guys. Plus, book a call for maximizing your wealth, which you absolutely need to do to secure further freedoms. There is a major right sizing coming for America, in our opinion, and with it, Europe and the UK too, which have done an even better job of being managing a controlled demolition of intent, I would say. This overall structure will be one of the biggest for crypto as a squeezy Japanesey. That's right. And we think that hammer is the beginning of a bottoming of a potential up leg that will do something like that. It won't be the biggest alt run. And then later, possibly next cycle, we break out and Bitcoin loses. By the way, this is inverted. So when you move higher, this is less Bitcoin dominance, more alt dominance. So actually, it might be easier to have a look at the alt dominance chart than the Bitcoin one. But that's how it is. So super low vol, big squeezing structure. A third impulse of upside this period will see alt dominance, and then maybe a bit of a rest and a bit more Bitcoin dominance before eventually leaving this zone as Bitcoin gets more trivialized. Sorry, it may be the first. It's not going to necessarily be the biggest forever, or if it remains the biggest, there'll be many other bigs that, when summed together, crowded out to only 24% and possibly beyond. Okay, so we stand by the altcoin dominance winning out. We did suggest when it happened that you could get another dip down. It hasn't really gone that far. That's a very small candle now. It is still early for the fortnight. When did that candle start? It began on 17th of February. It's a much lower volatility one. So Bitcoin really raced away with positive dominance. It got more dominance during the dip there. And now this 2 weeks, that's not happening very much. It's having another dip. In either this candle or a couple of candles later, that could be two, each candle is 2 weeks, remember, it could be 4 weeks from now, 6 weeks from now, we break to the upside for an up leg in the crypto realm. That's my take, and I think we're getting closer to that point. You're getting very close to this basing, very populated place between these two blue lines, which was the all-time low after the last bull market in 2020, 18 to 19, sorry, not 2020, 18 to 19, that set the 73 and the 60% there. You don't hold here for long in our view. We think you reject. Okay, so I love you and leave you and say it's unclear on all time frames, short time frame. Tether dominance to come back down a little bit. That means some money creeping back into the likes of Bitcoin. Bitcoin has a hammer. It may make a little bit of upside for a while. Be cautious. It could be the end. The double top has made its target, but remember, Head and Shoulders make targets as reversal patterns, and then you can have a cyclical down leg. So we'll see. Maybe we get a bounce. It is a nice long wick and a big rejection, so it should go for a little bit at least. We should approach the 90s at minimum again, which makes the 84 not a bad tactical short time frame entry. What happens after that? Well, we don't know. Macro, we still hold out if the bull market gets its dip and wash out. And that's a caution, because that could be medium term. It could even be long term that it happens, but I think more medium term, not too far off, but could be 6 months. Then you rally for 144 on the big time frame, alts dominating during that Bitcoin period. Okay, thanks for watching. We love you. See you on trading day. Hit the link below to book and enjoy time with us as we watch that unemployment number. If it gets dark on the employment side, we could revisit on a sell-off. So we could have a recovery week only to roll over next Friday. So those are scenarios we'll explore and we'd look to profit from in this environment. Till next time, thank you very much for watching. You can also book a call on the book a call link. Go to the Market Sniper website, should look like something like that, and you can hit the book a free call by doing that, and you can start today, in fact, by having that conversation and being in the community, starting your learning, your interaction and utilization of HVF method inside our community boards and where we all interact, which is a place very similar to what I'm showing you. It is it, literally, and all the content, the recordings, the forums, the webinars, the updates, the trades that I am taking, where I think stops should be placed on the basis of HVF method, how targets are likely to work, etc., etc. Our technical takes, which include voice messages, videos, recordings, not dissimilar to that, only for the community, on Vimeo, great audio, good quality, and our chart shares that we do. Until next time, thank you for watching, and we'll catch you later. Look after yourself. It's getting interesting out there, a little bit of risky off vibes. We'll see if crypto gets a little bit of Trump love now that gold is softening and had a bit of attention. Maybe that will give us a week of improvement, and then it's the unemployment number. It's going to be very important. We could get soft again after that. That would be one of my scenarios I'm playing around with much. Till next time, catch you later. Bye.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.